I look at this as just kind of that choppy momentum of a very old bull market. So I'm taking this kind of a day in stride.
In terms of the recent highs that we've seen, Chris, you think the celebration of hitting those highs was a little overdone because we've been sort of range bound rather than breaking out significantly to the upside?
Well, exactly, Wilfred. If you back up and look at this market, say all the way back to 2018, what you really see is a market that has gone a little bit higher than the range and lower than the range, but we've roughly traded in a 12% range. And the highs that we hit last week were not a lot of momentum, just barely crutching to new highs. That didn't signal a lot of strength to me, and I thought that, the market probably might trade back down. I would hate to see us go all the way back to 2550 on the S&P 500, but that could easily happen, and it's okay. It's not a recession. It's not a bear market. Just a normal kind of volatility we see in a very old economy.
So Chris, I guess that means you expected some form of pullback, given the ranges you just mentioned. How much more of a pullback would you want to see before you start to get confident that the next move is more meaningfully to the upside and you deploy that cash back into the U.S. equity market?
Well, Wilfred, I'm going to be like the Federal Reserve. I'm going to be data dependent. So it's not just how the equity market is trading, but what kind of information are we getting out of the economy? We're very neutral to our asset allocation right now. So we're not long, we're not short, we're right on the mark. And what I'm really going to watch is employment numbers, which remain strong, GDP numbers. I'm really curious to see if that number behind us in the first quarter gets revised lower. That seemed awfully hot for the first quarter of the year, given the weather issues and all the changes going on. So, and then the big question is going to be trade. So I think we're going to be looking for that to be stabilized, established. Then we'd probably go back and maybe be a little bit long stocks. But we're pretty wary in here because of the age of this bull market and just the stage of the economy.
So how are you positioned right now within the overall equity market? I know, you have certain rules and allocations, but where does the portfolio shift at the moment?
Well, Sarah, we're going to be pretty much replicating the market at this point. Not long growth or value. Small cap looks a little undervalued relative to large caps, but we're going to stay very neutral within our asset allocation and even within the U.S. equity market. We're not going to bet in any one of the particular sectors. Everything looks fairly valued, and that's really a challenge when nothing seems to be discounted in this market.
Chris, can you trade around the China trade headlines themselves? Do you think it's a key factor, or is it just one of many that goes into your consideration as to whether to be relatively risk on or risk off?
Wilfred, I'm going to pick on the word you used, a trade. We're not traders. We're investors. So we're not fast money. I always like to tease Melissa Lee. We're not going to be there on that show talking about individual trade ideas. We're going to be an investor. And so for us, we're not going to move specifically on that one bit of information. We're going to watch it because it's very important. The U.S. largest trading partner back and forth with China, it's really critical, particularly with trade in from China, on how that goes, how that affects things like soybeans-based products that impact the middle of our country. So how those negotiations go will affect whether we're maybe bullish or a little bit bearish, but it won't dramatically shift our overall portfolio. But it certainly would get traders focused. They were overly optimistic last week on the China deal and then suddenly crushed by the tweets on the weekend and overly pessimistic today and going into this week.
So it sounds like, if I'm trying to dissect whether you're bullish or bearish right now, you're kind of neutral. Sounds like.
I am bland and neutral. I hate to say it, but I'm not taking a lead off the base. I'm standing right on our base. We're right on our asset allocation. Almost every single asset class, spot on our asset allocation. Not taking any risk in here, just staying very stable with this kind of a market. It's tough to figure out. It feels trend bound, and so therefore not a lot of momentum for us.